we invest in a business, we think a bit like when people give money to a fund manager. It's like we're giving our money to Peter and Angus. Will I sleep well at night? Think, yes, delighted. These guys have got this incredible record of creating value, but it won't be in a smooth line.
The following is for information purposes only and should not be considered investment advice. All opinions and views expressed by the contributors to this podcast are in a personal capacity only. They do not represent the views of Progressive Equity Research or any other organisation mentioned in this podcast. For today's episode, I'm joined by David Seaman of Alpha Cygni Asset Management for a conversation with two mavericks, an entrepreneur and an investor. Angus Thirwell is the co-founder and CEO of Hotel Chocolat and was on episode 4 in December 2021. Angus has just completed the sale of Hotel Chocolat to Mars for a value of £534 million and has decided to roll most of his stake in the company into the Mars family structure as he sees an increased opportunity for the brand to grow under its new ownership. Gary Channon is the founder and CIO of Phoenix Asset Management, with a disciplined value style of investing detailed in previous episodes with James Wilson. Gary heads a team that manages UK-listed investment vehicles, Aurora Investment Trust and Castlenow. We are treated to a masterclass in Angus' careful stewardship of his premium branded chocolate, and the culture required to develop its full potential led him to his partnership with one of the world's biggest and most successful family businesses, and how Gary's disciplined approach to research and valuation delivered a stunning return by acquiring a 15% stake in Hotel Chocolat after its post-pandemic setback. We cover a lot of ground and discuss the health of the UK stock market, how to think about investing in consumer-facing businesses, and how failing and learning from mistakes is an important part of developing a business, whether in premium chocolate or asset management. Gary also talks about taking the funeral business Dignity private and his latest addition to the portfolio, Churchill China. Please enjoy our conversation with the Mavericks, Angus Thirwell and Gary Channon.
This podcast is brought to you by Progressive Equity Research.
So, Angus, thanks for coming back to talk to us. We've got a bit of ground to cover since you last spoke on the podcast, which was in December 2021. Welcome back. We've got lots to talk about, but before we catch up on all that, you've brought a guest with you and just thought it would be nice for you to introduce Gary.
Yes, so I'm introducing Gary Channon, who is the founder of Phoenix Asset Management. He's somebody that has advised and given me inspiration in different ways, and I'm pleased to be a very happy investor in his funds as well. So he's one of my go-to wise heads that I'd like to talk things through with, and delighted that he could join us today.
His name came up as a bit of a guiding light to how you thought about the IPO and the prospects of taking the company public, which was a big step and one that you didn't take lightly. I remember some pretty interesting meetings around certain issues at the early stages of the IPO, particularly.
Yeah, I think it's true that there's never been any dull chapters in the history of Hotel Chocolat so far. And that particular chapter was when we knew we had strong growth prospects, and we were looking for ways to, I suppose, access more capital to get behind those opportunities. And we'd been approached, as usual, by myriad people who felt that they could help us. And we were evaluating private equity, a couple of specific approaches from there. And Gary was introduced to me by Andrew Geary, who is somebody. Yeah, exactly. Our chairman, designate at the time, I think. And Gary and Andrew introduced the idea of considering an IPO, and that was something we hadn't really thought about before, and we could see the advantages of that, both because of our shareholding structure and the kind of brand that Hotel Chocolat is, and the ability to excite people around the future story. So yeah, that's how we all met.
Gary, welcome. What were your first thoughts when you met Angus and heard about his business?
Angus is evangelical about his business. I mean, the product's lovely enough, but you can't help but be enthused. But what I was, I suppose, struck by was how much they cared about where it would go. And also, I see a lot of founders. Some people want to build family dynasties. Some people want to cash out. They cared about the ultimate home of the business, even at this point. So yes, we've got opportunity, we need capital, but the thing that was most taxing them was who ultimately owns the business. I was struck by that, and that's why I thought an IPO might be the route towards getting the capital, retaining that control, and satisfied with all of the negative things that come with being listed. And then the selfish side that would actually give us access to the business. So yeah, no, I loved the business from the beginning. Meeting Angus and Peter, I remember that meeting was it really did open me up. And then we did some work after that. Really got to know the business, and that just reinforced what I'd sort of learned in that room. Often with businesses, the first meeting's the good one, and everything else goes downhill from that. But it wasn't the case with Hotel Chocolat.
But notably, you weren't an investor, as I recall, at the IPO. Well, I know because I was working with Angus on the IPO at the time. So you seemed to, from my perspective, you were this kind of mythical figure in the background. And then, well, where's his money? He, is trying to get a deal done here, Gary, and you didn't become a shareholder.
We first talked about a value because there'd been an approach and there were numbers, and we'd done some work and we had an idea of that value, and we were willing to put 25 million in at that time. And I rolled out one set of advisors who didn't do, I don't think, a particularly good job. And then I didn't realize it was you, Jeremy, but then I think Peter and Angus said, can you have someone else as well to compare? And then Liebman did a much better job, and they're doing it. And at some point, Shane called me and said, realize the valuation is much higher than where you're thinking, and which is great for Angus and Peter, less great for me. So we didn't buy any. I mean, and I got two clients instead.
Yes.
But we have a way, and we have a price discipline, and if you start breaking that, then you don't have a way of improving through time. So we didn't break that. The other thing I said to Angus at the time is we'll have our window. It's an entrepreneurial-led business. It won't unfold in a straight line. There'll be times, and so we'll be ready. I didn't know how long I'd have to wait, but I always thought that there would be potentially an opportunity in the coming decades to invest.
Exactly. And that led me to have this image in my mind of Gary sort of sitting like a buzzard on the telegraph lines, patiently waiting, and then, rousing himself to fly down at the appropriate juncture. But that discipline was impressive, and that led me to want to invest as a family into Gary's funds, because I hadn't really come across value investing as a philosophy before, and seeing that total discipline in action, because we knew that Gary liked the business. We knew he totally understood it, and understood it viscerally in a way that other people perhaps were kind of decoding us in a more superficial way. Gary really understood us, and we knew also that we were getting a good, debut price. So seeing that discipline in action actually was quite attractive, and de-risking our portfolio away from brand-driven businesses, growth businesses, into value investing seemed a good contrarian way of de-risking our personal wealth, I suppose. But yeah, it was, and then that moment did come for Gary, and he was ready. I mean, the speed with which,
and it's such a great case study in value investing that I really want to explore. But can you just catch us up on where we left off from 2 years ago to the headline moment of Hotel Chocolat gets acquired by Mars, such an enormous valuation? Can you just catch us up on that 2-year period just quickly in terms of what the issues were and how you dealt with them?
Really, what happened during the pandemic is it was a great performance on the revenue line, and in terms of customer acquisition, and a demonstration of our agility and cultural resilience. But there's no doubt that it depleted our coffers. We weren't able to make the same returns on the revenues that we were driving because of the costs of channel shifting, paying back the furlough money to the government and all those kind of things, our coffers were depleted. And having made a couple of bold moves, both in Japan and the US, and seen that the cost of running those businesses was also increased during the pandemic, we were in a position where we had to make some sensible choices. And those sensible choices were to protect the growth investments in the less risky UK market. So we wanted to continue opening stores, continue expanding our factory. But the more risky markets, which were more nascent, Japan and America, we would try and find a lower capital way of keeping the momentum going, but giving us time to rebuild our coffers so that we could then revisit it at a later time. So it was about preserving the opportunities. The market at that time was particularly febrile, and that message didn't really come across. I mean, no matter what we said, it was Hotel Chocolat has given up on international, and now it's going to become a cosy little British-only business, and all its ambition has just disappeared down the toilet.
So you were surprised how vicious the market reaction to that long-term strategy was?
Yeah, I was surprised at how the dumbing down of the message, particularly by the media, and then that led to a share price drop, which then became the story as a second, kind of dumbed down story. And Gary had educated me on share price movements being only a relatively small volume of people deciding, like a manic depressive, whether to buy or sell in a and a lot of our investors stayed loyal to the business and hunkered down and accepted that it was part of the twists and turns of trying to build a long-termist global market leader. So anyway, we managed to put Japan and the US on different footings, and both of them are now in the game. They're working. I've just come back from Japan this weekend. We've got a network of stores there with an improved partner. They're funding it all. They're excited about the possibilities as we are. And in America, we've got a pure online business that's doing very, very well indeed as a layer of kind of foundations of how we're going to take that business forward. So we were in the mindset of continuing, despite the share price was humiliating, embarrassing, painful, but inconsequential actually to how we were going to run the business. We weren't going to be selling any shares. We didn't need to raise any more capital. We had enough working capital to follow through on our growth ambitions on a slightly reduced ambition set. And then what happened was, and this has happened periodically in Hotel Chocolat's history, we've been approached by most of the people that you could think about in our broad area, and that is food and consumer goods, and yes, global confectionery as well. And there was a clutch of approaches, all spookily coming at the same time. And obviously, part of the appeal was the very low share price, but the other part of the appeal was we'd scaled above 200 million of sales, and we demonstrated through the pandemic a very powerful agility and a multi-channel approach, which is absolutely unique in the world of chocolate. So the number of reasons why people approached us, and not least the fact that premium chocolate is still growing at double the rate of kind of confectionery. So anyway, I was on the receiving end of multiple inquiries and worked out a very simple protocol to be able to evaluate them. The first protocol was, yes, I'll have a cup of hot chocolate with you in a chat, and I'm looking for some sense of the culture being a good fit for our very precious brand, which, as Gary referenced, both me and Peter have always had a kind of legacy view of, this brand needs a certain culture and needs a certain environment to be nourished. And yes, we could be super rich and very sad by selling to the wrong people, but we'd rather be maybe slightly less rich and happy by doing the right thing for the people, the planet, and our customers. I don't want old ladies spitting at me in the street or something, which people get very irritated about their chocolate and about our brand in particular. And I carry that with me. So the first evaluation was, is there any kind of warm feeling about the culture? And then the second screen test was, okay, well, what's the big idea? What are you going to bring that's additive to what Hotel Chocolat can do as an independent business. And then the third bit is, well, obviously the deal's got to be right. And nobody had ever got past the first screen test before, ever, until I met Mars. Immediately there was a feeling of a meeting of minds about what was important in the world, and the way that business is, really long-termist, thinking in generations, not quarters, and backing that as well with bold moves and the manufacturing heritage in the business.
Yeah.
There's a lot of things to like there. And the people I met were very similar to Hotel Chocolat people. I mean, if we joked about it, you can interchange them and, you wouldn't be able to tell who's from which business. So that was surprising to me.
That's an incredible thing to say. I remember we had conversations at the time about how you grow businesses and keep the culture, which is such a tricky thing to do. Yeah, here's Mars, which is a different type of business to the one we might be most familiar with. It's privately held and has a reputation for being quite secretive. But to be that scale, but to have those cultural values is quite remarkable.
I know, and a lot of our time inside Hotel Chocolat has been about figuring out how to get past growing pains.
Yes.
So to start to talk intellectually with an organisation that has some evidence of being able to overcome those and retain a boldness of action and a can-do spirit and a sense of courage was really, really surprising to me and eye-opening. And I haven't really seen that in many other organisations, full stop, no matter what size they are. Inside Hotel Chocolat, we do like to have that sense of courage and risk-taking.
Yes. Yeah.
And, it means that there's never a boring chapter in Hotel Chocolat's history. But to find that in a much, much larger business was something I never expected to see, frankly, and hugely attractive.
It begs all kinds of questions, but before we go there, could Gary just fill in that gap for us in terms of how you saw it and that journey you took from not being a shareholder to, at the time of the takeover, you were the largest external shareholder?
Okay, well, and we have a sort of a candidate universe, businesses we'd like to own if they were the right price, and we have to keep following that and updating, and that's where Hotel Chocolat was. And some businesses are easier to research than others, and when the product is as nice as we had no problem. I'd subscribe all over.
You're in the tasting club.
Yeah. But so we carried on doing our work, and what we do is we watch business in action. So most of what our team does, there's 12 analysts, is go out there and watch business in action. And so I suppose what I saw was Hotel Chocolat continuing to build its moat. So the stock market is not very well suited to businesses that are built by entrepreneurs like Angus, where culture. So what Angus just described there, trial and error. So you've got this great big opportunity set, all of the people who might potentially buy the product. It's self-actualization, so it's right at the peak of, so you delight people, you have the makings potentially of a great business, but finding that way there requires creativity and the willingness to fail again and again and again. And so, yes, if you've got 100 stores and you roll out 10 more, and that works on a spreadsheet. But if you say, I'm going to keep trying stuff and countries, so what I saw, big opportunity set, I was surprised how smoothly things went through, and disappointed, really, in the early years.
We did too good a job for you, Angus. That was the problem.
But that constant willingness to try new things, create markets. Nobody knew the Velvetizer was a market. The core model of Hotel, which is a 20-25% return on the core, the way we would think about it, and a very big space in front of it, in the hands of people whose money it was, who've got this long record of deploying it in a smart and intelligent way, but with a willingness to risk it with failure. Because when we invest in a business, we think a bit like when people give money to a fund manager. It's like we're giving our money to Peter and Angus. Will I sleep well at night? Think, yes, delighted. These guys have got this incredible record of creating value, but it won't be in a smooth line. So there they are, they're doing it. The pandemic for us was a great opportunity to see the strength and depth of organizations. So people focused on sales and profits, but without thinking, what do you think happened there? All these shops were there one day, then they were closed, then they're online, sales go through the roof, and they're delivered, and they've got good Trustpilot scores. That doesn't happen by accident. That doesn't happen with a couple of visionary leaders at the top. That's strength in depth. There we saw that, strength in depth. And then, so actually, I think we were doing an update. I changed the analyst and asked whether she could come up and see the factory. And to Angus's credit, continued to allow us to research the company without an investment. But at that time, shares were very high. And I think we had a bit of a banter about, are we now a value stock? And I was saying, no, I accept we're not, but we're updating our work. So that's what I saw. Here's a business we would still want to earn. And look at the competitive landscape, just wiping the floor with competitors. And is it the real thing? The whole sustainability piece. It's very hard when you're a small part of the supply chain like Hotel Chocolat is to make a difference back in the Ivory Coast. And most companies would just accept it and that's it, we can't do it. But that constant effort to... Anyway, so there it was. It was the real thing. We'd like to own it. And then along comes which happens to all businesses. You don't unfold in a straight line. But they decide to put it all together. And I wouldn't have predicted that much of a reaction. If you told me we'll make this statement, where will the shares go? So then for us, that's Christmas. And I tried to buy 25% of the company, and we managed to buy 15.
So despite the gain from the sale, were you disappointed then that they decided to accept the offer?
Well, we have to redeploy that capital. But the one thing about giving the money to somebody whose money is as well is that they've got a price that is fair. It is an extraordinary business. I think Mars will do very well out of it. But the most extraordinary thing here is that Angus has rolled in, and nobody gets this.
Yes.
This is really, really peculiar. You show me another Angus rolling in the way he's rolling in. People say, there's an earn out, but it'll all change us. But this is genuine. And so he managed to find a buyer, paid no attention to the stock market, looked at the business on its own merits, and paid a fair price. Yeah, so we won't find many Hotel Chocolats, and we can't just roll into another one. But we did get a fair price for our holding. But yeah, no, I'm now eating chocolate, and I can't call it research. It's problematic. And also, he's true to what he said from the beginning: is it matters who. So one of the first things Angus said to me when we told him about the deal is that Mars has made this huge investment in ethical sourcing, and actually, where's the payback for them? So this is a strange element to talk about to someone who's going to sell their shares, but this mattered to him, and so I saw that he'd found, so some eagle-eyed observers had noticed we put a thought piece out about Mars just about 3 months before. We had no idea. And it was about that Mars is super long term. The way they think about just this is somebody who's obsessed about depreciation as it happens, but the way they think about it just tells you about the mindset, which is super long term investing, fully invested for the long term, not ignoring. So it was like it was the perfect home, I thought, and we got a perfect price. So yeah, we were happy, and we look like heroes because it all goes, we make some return in a short period of time. But yeah, very disappointed to see it leave the portfolio, if I'm honest.
So Angus, this process, resulted in you committing yourself to the new ownership structure under Mars, but I think Peter, your co-founder, isn't coming on that journey with you. That's my understanding. Was that a part of the reason for thinking about selling or taking this step? I won't call it selling the business, but putting it into different ownership structure, or was that just the outcome?
There are other ways of achieving a kind of glorious retirement for Peter, who's approximately 10 years older than I am. Yeah. And, I did have it on my mind that I wanted to try and conjure something up, but there's myriad ways of doing that. So I wouldn't say it was a driver, but it ended up being a very elegant kind of solution and a suitably glorious exit, which is at an executive level. So Peter's enjoying his well-earned retirement. He's not employed by the business anymore. However, he is also, to a much smaller degree, being allowed to roll into the next chapter. And I was really pleased about that because I didn't want Peter to have a terrible case of FOMO, which would, every entrepreneur is, susceptible to. So I think we struck the right balance. And, now, everybody gets more risk averse as they get older, typically. And, you could probably imagine that there were robust arguments about different levels of risk taking as the different chapters of Hotel Chocolat evolved. And it was naturally the right time for this kind of thing to happen. But I'm really excited about investing alongside the Mars family in the next chapter and what we can build together. I mean, the way we describe it is like strapping rocket launchers onto the side of Hotel Chocolat. And I mean, yes, some customers and some media commentators are skeptical and saying, watch everything start to diminish here. All their brand values, all the ethical program will be quietly scrapped. But I've been assuring people that that's not the case. On the contrary, we're going to be able to drive all of our brand values harder. So there's going to be more innovation, more focusing on skills in the business, and a harder push on our ethical program as well. So actually, I've been saying to people, look, judge us by what we do next, not by what your fears may be. This is not an archetypal conglomerate swallowing a promising business and kind of absorbing it. We're going to be a totally separate new division with protocols and a mandate, and everybody wants our brand values to be strengthened, and that's our strategy.
So you can rule out pet food in Hotel Chocolat anytime soon.
Yes, yes, exactly. However, there are tons of other synergies within the Mars international platform. For example, Mars has amazing factories making all manner of things, which could be purposed to making Hotel Chocolat products. And the expertise that Mars has in manufacturing, going back to more than 100 years ago in Slough, which is arguably how today's Mars business really started. It's actually, I contend, really a British business. It started in Slough and then grew and then took over the American business and absorbed it in.
Yeah,
it's got a terrific and proud history in manufacturing in the UK.
So Gary, you're used to this world increasingly now of transitioning between public markets and private markets. You have obviously taken the step most recently by taking control of Dignity. How do you see, you're clearly managing investments in listed investments. You seem quite certainly capable and happy to take businesses off the market. How do you see the sort of health of the UK PLC? It's obviously a hot topic at the moment. We haven't really talked about the huge premium that Mars paid above what the prevailing public market valuation was of the Hotel Chocolat business. I mean, nearly twice the value, sorry, more than twice the value. How do you view the whole public-private debate?
I mean, those are a number of things sort of rolled into one. I mean, the UK is suffering from a sort of an international perception issue, partly fairly, earned by people not understanding Brexit, which was not really hasn't been an economic thing. It's been an economically negative thing. Probably even more so by UK institutions over the 25 years I've been in the business, just essentially not doing UK investing, just moving globally. And then the UK market being dominated by some pretty terrible sectors, oil and gas and financial services. And who wants those? Those are not great businesses. And so all of that has sort of not makes it an unattractive place. So if you combine that with then businesses who might be going through a tough patch, you get some very low valuations. I mean, it's great for value investors, but not if you're looking for a re-rating. You need patient investors with you because some of these sectors will trade cheap and keep trading cheaply. I don't know. I believe all these things have their own sort of long-range self-correcting mechanism. And what's happened to Hotel Chocolat is part of that. The catalyst to attract value is that people will come and buy businesses. People won't float if you can't get a proper value, and people will come and buy them, and that will cause some changes or attract some capital. From our perspective, we want to be able to do whatever makes sense. Our job is to put our investors' capital in businesses that earn high returns and earn high marginal returns, and our job is done, run by people we can trust who think we're good at doing it. And by adding the ability to take companies private, we just sort of added to that a capability. And I will say that I did reach out to Angus and Peter in the depths of their despair and said, if you want a home, a shelter, then come to Castleknock. But then they said, what can you offer? Well, I can't. We're not sourcing any chocolate. We have nothing about manufacturing. So nothing, just a harbour from the storm. And Peter said, well, will the shares go back up, do you think, if we stay? And well, yes, they will. So I didn't have much. But had they decided, look, really, I'm just fed up of the market and all of this stuff, then I hope that some entrepreneurs will think, well, actually, this is much more attractive to operate in an environment where actually I've got supportive long-term backers and I don't have to pay any attention to the share price. And we want to do more of that. And I'd like to have more Angus's. The businesses we have got are turnarounds. And I think turnarounds are really, really hard work. And very risky. You can start with a very low price, which is what we have, but still, I think we probably would prefer to do more of the Hotel Chocolats and back good people and help something good become great. But I haven't given up on the UK market. I think these things will be cyclical. There's a huge amount of entrepreneurial talent within the UK, even more so than when I started. It's much more likely now that someone leaves uni and wants to go into a startup than it was 20 years ago. So I think we'll have plenty of good businesses coming along, and the stock market will be there for them. The UK eventually, and it's already happening. I think beginning to attract attention from people who are struck by its level of valuation.
In the AGM last year, you described Dignity as the type of investment that you'd waited for many years. You seem to still have plenty of energy. I mean, can your ambition grow from here then, in terms of the type of value that you can seek to add as you add capabilities to the group?
Yes, I mean, again, it's a business that's in self-actualization space, end of life. It's a very poorly served area. It hasn't contemporized. It's a huge, huge space, and there isn't much entrepreneurial creativity in that area. We've got a lot of fixing of the plumbing to do to begin with, but we think do that business well, and you'll have a great business. It's a growth space, unfortunately. I mean, the population's growing and will die, but it is there's a lot of opportunity to bring a better service, I think, for end of life. And Dignity is a wonderful platform in which to do that. So yeah, we want to do that. It needs a lot of help across a lot of part of the space. We're in weddings, we're in funerals, and if we see areas that are like that, where we think, hang on, look, it could be veterinary services, where Mars is. It's an emotive, community-based business where if you understand human beings and you understand how good culture can create great businesses, we might be able to apply some of the learnings we've got from the businesses that we own. And yeah, so we'll continue to progress in that way. I do think we're onto something. We need to prove that we can do it. And it gives us extra armory when we look at businesses, that if we can both buy a small piece of a wonderful business or buy all of a good business for a fair price and improve it. And we connect the two. If we can hang out with the Anguses and plagiarize their good ideas, we can improve our own businesses with that.
You mentioned there a bit earlier, Gary, about having to redeploy then. So the bittersweet moment of realizing the gain on an investment. We note that recently Phoenix filed as a 5% holder of Churchill China, a business I'm only superficially familiar with. It looks like a decent enough business at a fair price, at least superficially. What is it that you see there with Churchill?
We've been building that stake for a long time. I mean, that's the nature of us. I think we've been buying for 2 years. Again, we did a lot of work. In fact, we set ourselves up as a restaurateur in order to study that business as a customer. So what Churchill China is focused on is providing ceramics to the hospitality industry, so not to retail. And there are different characteristics that are important. So how durable the product is, but also availability. If you have breakages, they need to be able to replace it. So how reliable a supply are you? And in the Instagram generation, actually different types of plates matter in a restaurant. People take a picture of them. And that is a very well-run business. They understand their space. They're growing organically against competitors who are underinvested or owned by private equity. So gradually increasing their capability. But as a family generational shift over, so the family has gradually been reducing their stake. I think the family has about 30% now, and it's a small cap UK equity gets undervalued. So very well run, now into Europe, haven't really started on North America, but you expand one restaurateur at a time. They have Wetherspoons, so every time Wetherspoons opens another one, then there's another customer, but they've got to keep signing up restaurants. We can monitor their activity in the field, but yeah, they deploy their capital intelligently, make a high return, and they have a lot of runway in front of them, and we think the people who run them are very, very sensible. It's just very illiquid. And so we only have it in a permanent capital funds like Aurora, because if it's taken us 2 years to buy 5%, it doesn't lend itself to redeemable capital.
Presumably those Greek plate smashing restaurants that make the best customers.
Yeah.
I mean, you both invest in consumer-facing businesses, particularly in the UK. What is the state of the UK consumer?
I don't think that this sort of idea that people have, they focus too much on the cyclicality, if it matters. In nominal terms, consumption has gone up almost every year since the war. I think there's one down. And we report in nominal terms. The stock market's nominal. Nobody reports real earnings. So the big thing is, where are the shifts? What's happening. So some things are slow moving, some things are fast moving. Consumption of chocolate is a slow-moving thing. There's a lot of predictability about it. But as we become wealthy as a country, premiumization is happening everywhere. People will high-low. They have the ability to save money on things, and they access that where it doesn't matter to them, and they put their money where they do matter. So you see it going on everywhere, where the premium piece is outgrowing. Now, in luxury, they've kind of overdone it, and they were egregious with pricing, and there's probably a reversal to come with that. But I think the consumer is plentifully robust. People pay too much attention to the ebbs and flows of the short term.
Yeah, I always think about it as the household sort of juggling its expenditure and deciding where the next thing they want to go large on is, which, given the emerging premiumization opportunities and all manner of things, as Gary referenced, it means to balance the books, something else has to be taken more basic. And, if I suppose getting on the go food is not highly prized by the family, or they wise up to the fact that Greg's actually does really good coffee and has got some good stuff at affordable prices, then they can switch their expenditure into that, freeing up expenditure to then go after other things. And that's where, in the consumer space, brands can still overperform by innovating, by telling the story really well, giving great service. And actually, there's tons of opportunity in the UK space. Even if we go into recession, it's still a massive economy. And what is a recession? I mean, you're still holding on to 98% of that expenditure, and it's distributed unevenly across the economy anyway. So I think the media and commentators make a huge hype about this, which is massively unhelpful, because that actually seeps into the psyche of everybody and makes them a little bit more downbeat than they should ordinarily be. But the good news is they then need a little bit of chocolate to get them rebalanced again.
I think investors should pay very little attention to the macro story. When we started out, Thornton's dominated the high street in chocolate, and Angus had barely got going. He may still have been Choco Express at that point, 26 years ago. And you could have done all sorts of chocolate consumption models and worked out, but it was meaningless. There was going to be a chocolate market. What you wanted to pay attention to, who was winning, who's been the battle. And so there's a big consumption pot. And as an investor, you want to look at who's winning, who's delighting customers and growing their customer base, and who's not. Because when you fail, it's a wipeout. And when you succeed, it's multiples. And the economic backdrop to that is noise.
It's a good point, because I think at the time of the IPO roadshow, the first 20 minutes of each meeting was dominated by Angus and Peter explaining why they weren't Thorntons.
Yeah.
I went to Thornton's in my first year at Phoenix, went to visit them, and they were sort of at pains to tell me that they were not See's candy, having seen that we were inspired by Buffett. I didn't know why it was a positive.
Okay, yeah.
But I did see that they had a big factory, and they said, well, we're filling it up by supplying the supermarkets. And
yes.
And I didn't invest. So.
Well, every time I saw Hotel Chocolat brand in Waitrose, I would send Angus a photo saying, "Are you sure?"
Waitrose.
Angus, you did a great job of explaining, what it was about the institution of Mars that you feel makes it a good home for Hotel Chocolat. And although you've been at pains to preserve the character of the business that you've built, I guess part of the idea is that it will survive longer as part of a larger institution. So there are changes. It's always been something that has engaged or been difficult, I think, for me to figure out. But when it comes to our own business, the business of asset management, if we institutionalize a creative business, which I guess you could argue asset management is to a degree, it almost has the opposite effect, that rather than making it live longer, we can almost threaten to sort of put out the spark that makes it value added in the first place. So given, Gary, you've been such a close observer of Hotel Chocolat's journey and many other investment cases. We're very interested in, how your thoughts about your own business perhaps get affected by what you learn from observing entrepreneurs like Angus.
Cultures do struggle when they lose founders. So they need to be handed over to people who share the culture and preserve the culture. So Hotel Chocolat hasn't become what it is on the basis of just Angus. So there's a team and there's a way of working, and so can you institutionalize that? Well, if you have the right owner and they allow it, they provide the supportive stuff, which is the capital and the umbrella from the external distortion. Then what you've got a different type of business there. You've got a sort of a product and a service, and you've got 9 billion people, most of who don't even know or don't have access to it. So that's a lot of runway. You could see how that could become a much bigger business. Can they hold on to the values? Well, that's where it's going to matter. But I definitely think Angus has more chance of achieving that than Ben and Jerry did, because Unilever is a PLC, and the people who bought the business are no longer there. And you're going to deal with different people. And that's not true of the Mars family. You're going to deal with the same people. You've got a lot more chance. Asset management is very different, I think. We want to institutionalize it and make it as much a process as we can. But it's a bit like football, that the value, or investment banking, the value accrues to the employees, not to the owners. And so I think the best asset management businesses have always got to be employee owned, or if you're invested in them, it's got to be a co-ownership model, because as soon as you break those two apart, you get this incentive. It's always going to be more rewarding for someone to leave and set up on their own than it is to work for a large institution. So I think asset management is very different. Unfortunately, if I was really thinking about building a large pot of capital, I should have probably chosen something more like chocolate, or something you can sell, rather than something that's more like dentistry that you have to shut up shop. But we are trying to build something at Phoenix that has legs, and really that will come from having people who can perpetuate what we do, build a culture, but ultimately stay employee owned, I think.
Well, having heard you talk and having previously had James on a couple of episodes, actually, I can definitely sense a high degree of difference from what you're doing at Phoenix to most other fund management, asset management organizations I've come across.
Yeah, we think we're different, but also we're learning at a rapid pace. We're evolving at the pace at which we make mistakes, and they are plentiful. We are going to be a product of our culture clashing with our opportunity set. So we will keep evolving. I think the moment we stop and think we've figured it out, it'll all go down. But asset management is not one that's easily owned at an institutional level. But this is really about Hotel. I do want to say, I think it gets lost on people just how extraordinary it is, a business like Hotel Chocolat. I don't know how many chocolate businesses have been started, because we track the world. I see lots start. So you think they're under threat. Or someone's always sending me the latest one. Look at this business here in Bristol. Look at this business here. And so most fail. It's an extraordinary outcome to build something like that. And there'll be 100 other people who seem to start in the same way and failed. And it's hard to follow the failure stories because they don't get covered. But what's happened at Hotel is truly extraordinary. However, and Angus will probably have his own view of this, the best days may be yet to come. And unfortunately, we won't be able to share in the financial rewards. But I think it's very interesting what's going to happen in the next 20 years. We'll be watching it closely.
Yeah, thank you, Gary. I very much feel like we've written sort of like volume 1 of Hotel Chocolat's business history, and now it's less a new chapter. It's volume 2, and I look forward to getting stuck in. And we do really feel like we're at the beginning of just something that's going to be amazing, and a lot of value creation, a lot of fun. And it takes a long time to mobilize the momentum and get the lines of trajectory all pointing the right way, so that the opportunity set is actually teed up. And the last thing I want to do is, go back into the locker room now that I've, got that opportunity teed up. I want to play on the pitch a bit longer.
Well, you seem just as excited about
back
it.
in 5 years and update you, and when we persuaded Mars to buy Phoenix.
Mars moves into asset management.
Yeah.
Well, yeah, Angus, you certainly sound as if not more excited about the business and your opportunity within it than than you did 2 years ago, and you were very excited about it then. So that's fantastic, and probably a good place to finish. So thanks very much. Really enjoyed the conversation, and hopefully we can have another catch up in the not too distant future.
Thanks a lot.
Thank you both.
Thanks for
Thank
having me.
you. Thanks, guys.
This podcast was brought to you by Progressive Equity Research.